In the currency quadrant, taking a look at a two-day losing streak in the September British pound after reaching a one-year high. The sterling is now down 2 consecutive sessions, but these two lower volume sessions certainly don't equate to a reversal of what the pound has been doing in the short term since June 27th. And in the longer term, since about April 22nd, the pound is down 0.2% in 2 sessions, about 66 basis points. But since June 27th, including today's drop, it's up 2.4%. And since the low on April 22nd, it's up 5.06%, including today. Now, the high today, 129.57, was only up 2 basis points from the settlement yesterday of 129.54. The low, on the other hand, 129.07, was down 1/3 of 1%. And with a little bit of time left in the session, but the New York session basically closed, we're still down about 0.2%. Now, looking at UK fundamentals, this morning retail sales came in weaker than expected, with the month-over-month data down 0.8% and the year-over-year data sitting at down 0.2%. Both were expected to be positive and both were lower than last month's readings, although last month's month-over-month data was revised lower, while the year-over-year data was revised slightly higher. On the previous day, UK employment data came in mixed, with the number of jobs added beating expectations, but the number of people added to the claims rolls also higher than expected. This data likely was mixed enough, I should say, to cause some profit taking from those one-year highs. Again, it was a lower level couple of sessions in terms of volume. U.S. rates are part of this as well, as a rate cut cycle becomes a reasonable assumption based on market pricing, with a 93.5% probability of a September rate cut, according to the CME Fed Watch tool, and the highest probabilities being for 5 more cuts after that through July of 2025, which would weaken the dollar and therefore strengthen the pound. So this really sort of bolsters the idea that this move may not be that significant.